stocks and commodities continue to be a sea of green, there are more and more red flags, and the chorus of doubt, well, that keeps growing louder. In a letter obtained by the Financial Times, famed value investor Seth Clark says individual investors are loving this market, well, that he calls them frogs sitting in boiling water. He actually blames the Fed for this intoxicating atmosphere that has led to most of us forgetting about risk. Meanwhile, the number of fund managers in this country, according to the latest Bank of America survey, that see inflation at its highest level in years. Even consumers, by the way, now see inflation going up 3% this year. And then, of course, there's the troubling rollout with these COVID-19 vaccines and the impact of continued lockdowns will have on this economy. The irony is that all of this just makes central bankers need to print or want to print even more money and gives the federal government even more excuses to add to the debt. Then there is the red flag of uncivil war in the nation. We heard about it yesterday, and I got to tell you, it must find a way for calm, or I think we'll risk fumbling it all the way. I want to bring in on these topics AGF Investment Chief, U.S. Investment Chief Strategist Greg Valliere, along with Bianco Research's President Jim Bianco. And I want to start with this warning letter from Seth Klarman, who apparently told his clients that central bank policies and government stimulus have convinced investors that risk is, quote, that it simply has vanished, leaving the market unable to fulfill its role as a price discovery mechanism. Greg, your thoughts on that?
Well, the first thing, Charles, and great to see you, the first thing I'd mention is that the Treasury 10-year bond yield is now at 1.10. Not a problem yet, but it seems to be moving in a direction that eventually could be troublesome. Our own analysts at AGF are saying we could be at 150 by early summer, we could be at 175 by the fall.
You know, everyone is talking inflation now, but I got to tell you, Jim, you were ahead of the crowd, and it looks like it's only going to be amplified a lot more. But on the other side of that, people are arguing it really doesn't matter. Interest payments are so low, it's not going to break the bank. So what are they getting wrong?
They're assuming that interest rates are going to go up, and they're going to stop at some manageable level. But once they get going, they can really start going, and that can be a problem as well, too. I just want to emphasize, though, that rising interest rates in and of themselves is not necessarily a bad thing. It's why they're rising. If they're rising because real growth is booming along and everybody's making more money and there's a higher standard of wealth, that's actually a good thing. But if they're rising because inflation is creeping back into the system, and if you keep mailing everybody money, and eventually when they feel comfortable, when the lockdowns are done and the economy returns to normal and they start spending it, you could very well have inflation. And in that case, rising interest rates could be a real problem, especially for markets like the stock market.
Of course, Greg, that's what Wall Street is banking on, though, right? That they're assuming when they run up Capri and Macy's and these broken down retail names, they're assuming that floodgates are going to open and people are going to spend like crazy. So your thoughts on inflation and this sort of taper tantrum, if you will. The last time around during the Great Recession, it happened at a much higher level. So why the anxieties now?
Well, I think in a word, bubbles. If you look at real estate values now in Nashville, Charlotte, Florida, Austin, Texas, real estate values are red hot right now. Maybe not everywhere in the country. You might even argue the stock market is looking pretty frothy as well. So I think the Fed looks at bubbles and says we are going to keep the funds rate close to zero for another 2 to 3 years. And when you announce something like that, you just reinforce the belief that bubbles may make some sense right now.
All right, Greg, I also want to ask you about our divided nation, because I read where you say we would love to believe that unity will prevail, but there are two issues that make you skeptical: the impending impeachment trial and economic prescriptions. It seems that both, in my mind, both could be avoided or altered or mitigated, although I doubt it will happen. Why are you so concerned that will blunt any efforts for unity?
Well, it was nice hearing people talk about unity yesterday. It's an admirable goal. But at the same time, I think you've got to worry that we've got an impeachment trial coming up in the next few days. I think it's going to be bitter. I think it will once again divide the parties. And secondly, there's not unity. If you listen to the Janet Yellen testimony yesterday, there's not unity on an economic prescription. The Republicans feel the price tag is way too high.
Right. Jim, you've been doing this for a long time. You and Greg are two of the best in the business. But you seem to be in awe of this chart. I hope we can put it up here. The Goldman Sachs Non-Profitable Technology Index. It is a sight to behold, up 386% since last March. And it seems that many of those names, maybe they're on a pathway to profitability. So should we make the correlation to the tech bubble? Or is this a true red flag right now?
No, I think it's a red flag. I mean, Plug Power and NEO are leading the charge. That's almost 20% of the index right now, and it's been soaring higher. I think what investors are looking at is an environment where heads I win and tails there's a bailout. The bailout either comes from the Federal Reserve printing money and supporting the market, or it comes from Congress, throwing money at the airlines, if you will, and saying that they're not going to let them go under, or the cruise ship operators, just to give two examples as well. And also with this environment of a lack of risk, I've heard investors talk about, look, I can invest in all these companies, and if 90% of them go to zero that I invest in, and one of them becomes a unicorn, I'm rich. So the mentality of risk is, believe me, a couple of them going to zero isn't going to stop them right now. And that's because there is a perception of a backdraw, of a bailout or a backstop, and the perception that the upside that one of these winners is going to have is going to more than make up for all the losses along the way.
Sure. I mean, they think if any of them are the next Tesla, for instance, then they're okay. By the way, VCs have gotten away with that for a long time. Greg, Jim, two of the best. I appreciate you guys starting the show off for me today. It's one thing, of course.